A little over 3 weeks ago, I updated you on my Vanguard portfolio, which was sat at £12,084 with a rate of return of 25.55%. In that short time, we've had a mini budget, 2 Chancellors, rampant inflation, more U-turns than I can count, and a pound which has almost hit parity with the US dollar. Oh, and to add to that, a crashing bond market. Who would have thought it? To add on to that, the markets have been incredibly volatile with pullbacks of over 2% in the last week. So what better time to have a look at the rubble that is my portfolio. Since the last update, I have invested a further £200 into my portfolio, but there's still more to be invested in the month of October. But as you'll see, the portfolio has still declined in value. If we jump right in, you can see the total value of my portfolio is currently sat at £11,862. So it has declined in value to the tune of about £200. But if you consider the fact that I have invested £200 since the last update, I'm actually down about £400 since we last looked at the portfolio. My personal rate of return is way down now from 25.5% to 16.84%. So we're getting back to the territory that we're in the COVID pandemic, where things did start to fall very close to break even. Remember, this is time-weighted return, so the actual cash-on-cash return that I'm seeing in my portfolio is actually a lot less than 16%, but we'll check that out in a moment. Whilst timing the market is something that I don't believe in, as a long-term investor, when markets do pull back, I do try to take the opportunity to invest more capital at a lower price. And this last week has been no different. I've bought into the S&P 500 on 3 separate occasions, totaling 5 new units of the fund into my portfolio. You'll notice that one here did cancel, and that's because the value of the ETF went over the amount that I'd tried to invest. So it obviously cancelled that order because I hadn't allocated enough capital. I've also invested twice into the FTSE 100 when the market pulled back last week, meaning that I've got 2 new units of the FTSE 100 in my portfolio, and also a new investment in the emerging market ETF. I made these investments to take advantage of the market pullback, but also to fit in with my target allocation of each of the ETFs that I currently hold. If we pull through to the performance tab, we can see a more detailed breakdown of exactly where my portfolio is at. You can see since inception, I've invested £10,970, and that's now worth the £11,862 that my portfolio is currently valued at, which shows a total investment return of £892. And some of this is obviously dividend income and some of this is capital growth. While this does show a personal time-weighted rate of return of 16.84%, that's not the whole story. And the cash-on-cash return is actually closer to an 8% return on investment. About 4 to 6 months ago, my investments had actually returned me close to £2,000. So being at £892 now, my portfolio has in essence lost around £1,100 in net accrued value. While this isn't an issue by any stretch of the imagination, as I'm not needing this cash anytime soon, it does show the impact that a market downturn and a bear market can have on somebody's portfolio. If we pull through to calculations, we can again see that more detailed breakdown of exactly what's going on. And the first thing you'll notice is that my dividends for September have now been paid. You'll notice that the current capital growth that I've received on the investments that are currently active is just £162 now. So that's fallen substantially since we last spoke. The investments sold, so the life strategy that I sold, is obviously still on £341 that have been returned to me. And my gross interest is at 71 pence, but that's, as you'll see, increasing now. Dividends over the time since I started the portfolio are now up at over £400 at £417.31. So really pleasing. They're really starting to snowball now and actually starting to be a substantial income into my portfolio every single quarter. That, of course, is immediately reinvested back into these ETFs to continue the compounding effect and mean that I can reap the rewards of more dividends and hopefully more capital growth in the future. Total charges on this account are now just shy of £30 at £28.97, which again equates to that total portfolio return of £892.98, or around 8% cash on cash return. We'll take a quick deviation to the usual update and have a look at exactly how much I was paid in dividends by each of the ETFs that I hold. So to do that, you come over to the left-hand side and click on Transactions, and then go to the Cash Statement tab up here at the top. Click through to that, and then what I like to do is change the records per page to 10, just so I can see a little bit more data, and then scroll down here and you can see the dividends here as green income into my portfolio. and I've obviously been paid 6 times for the 6 ETFs that I hold. So a really quick breakdown then, I was paid about 25 pence per unit of the S&P 500, which equated to £22.48. For the Asia Pacific ex-Japan, I was paid around 25 pence a share, which equates to £8.20 in total dividend. For the Europe ex-UK ETF, I was paid a small dividend of around 6.5 pence per share, so that equated to a small dividend in total of £3.02. The VUK East, the FTSE 100, is always a fairly good dividend payer. In this September dividend of 2022, I received 38 pence per share, which equated to £20.26. The V Japan's, the Vanguard's Japan Fund, I was paid just under 4 pence per share, so again a very small dividend for that one. And I received £1.43 in total dividend. And then the largest dividend that I received was for the Vanguard FTSE Emerging Markets, where I received just under 69 pence per share, which equated to £25.52. All in all then, that's a total dividend income for September of £80.91. So a little bit below the previous quarter, which is around £93, but still very nice income into my portfolio. If we consider £80.91 as the average quarterly dividend, if we times that by 4 and divide it by the total capital that I've invested into this portfolio, you'll see that I gain a total dividend return yearly on average of 2.95% of my invested capital. So that alone is better than almost any savings account out there that you can get at the moment. If we come back across to the performance tab and have a look at the month by month breakdown, you can see that September finished fairly poorly, with the total market returning to me negative £643 during that period. So the market really did tank in the month of September, and this month isn't looking any better so far, with me down £177.15. Of course, the £80.91 dividend that I received, plus the 8 pence in interest that I've received this month, has made the overall position of my portfolio slightly more positive, with me only down £96 at this point, but there's still a long way of October to go. If we pull all the way back to January, you can see just how poor the return of the stock market has been during 2022, with me only netting a positive rate of return in 3 of 10 months so far this year. If we look at December, you'll also notice that month that I alluded to, where I was almost up over £2,000 since beginning this portfolio. However, now we're up just under £900. We've lost about £1,100 in value, which does sting a little bit. So we'll pull across to the investments tab then, and we'll have a look at the overall gross return for each of these different positions, obviously accounting for both capital growth and dividend income. We'll start off then with the emerging market, in which I'm currently down just under 7%, or £62.56. The developed Asia Pacific ex-Japan, I am actually up 11.71%. Funnily enough, you'll notice that this is all coming from the dividend income, because my capital return is actually completely zero, and my unrealised gain or loss is exactly zero as well, which means that nothing in essence has happened. It did climb, but it's now back to exactly the amount that I've invested into this fund. So I'm up in this position £45.69. The developed Europe ex-UK, I'm down at 16.89%, or £129.06. The FTSE Japan, I'm again down 11.83%, which is just shy of a loss of £69. The FTSE 100, I'm up 19.69%, and of course most of that comes from the dividend, as you can see from my capital return over here, which equates to a return of £170.64. The S&P 500, the final ETF in my portfolio, I'm still up 35% on a time-weighted return, with that equating to £628.92. So maybe I should have just invested all of my money into the S&P 500. I have thought about it. As a final touch, we'll just have a look at the exact amount of units that I hold in each of these funds. And you can see that not much has changed, but the S&P 500, I'm getting ever closer to holding 100 units in this fund, and that would be a real milestone for me. This will definitely happen before the end of this calendar year, which then means that I can continue to push on, with the next milestone being 250 units of the S&P 500. So there we have it then, another update on my Vanguard portfolio. Things aren't exactly going swimmingly, but this is a great time to invest extra capital into your portfolio, because you will maximize gains as we start to grow out the other side of this market downturn. It might not look like it at the moment, but at some point things will start to settle down, and from that solid foundation, new growth will emerge, and that's when we'll maximize the rewards from investing capital and cash throughout this period of time. If you do want to be able to invest even more capital throughout this period of time, check out this video up above on match betting that's made me over £10,000. And if you want to check up on my portfolio when I very first started it, check out this video over here. Oh, and don't forget to subscribe for more content.